a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Let's take a look at some safe ETFs, given all of the recent heavy volatility in the stock market. Our ETF research director, Nina Mishra, is here to help guide us in that direction. So, with all of the high volatility that comes with situations like we see with the coronavirus, are there safe ETFs to turn to?
Yes, and we'll take a look at those safe ETFs. So last week, global stocks saw their worst weekly decline since the financial crisis.
Yep.
And in fact, US stocks lost almost $3.6 trillion in market value. Now investors are trying to figure out whether the virus would have a lasting impact on the global economy, or it is going to be something temporary. And that is why last week they were selling stocks and other risky assets like high yield bonds and piling into these safe assets like government bonds, gold, yen. Now today stocks are rebounding nicely, but bonds and government bonds and gold, they are also up today. Gold had in fact touched its 7-year high earlier this month, and then it saw some profit taking on Friday, and it is up again today. The 10-year government bond yield has fallen to all-time record low because investors have been buying bonds. Now, despite today's market recovery, nice market recovery, markets may remain volatile because the impact of virus is so uncertain. So for investors who are worried about this market volatility, they can take a look at some of the safe ETFs and maybe put some money in those safe ETFs for reducing portfolio volatility.
All right, and those are the ones we're going to look at as of today, March the 2nd. The first one that you want to talk about is the iShares 7 to 10 year Treasury Bond ETF.
This is one of the most popular government bond ETFs. The ticker symbol is IEF, has more than 21 billion in assets, charges a very reasonable expense ratio of 15 basis points, and basically intermediate term bonds. So not a lot of duration risk, about 7 to 10 years remaining maturity of the bonds that it holds. To take a look at the ETF, you can go to the quote page, and from there the external home page, iShares web page for the ETF, and you will see that it is up 6.4% year to date and holds 7 to 10 year bonds. And there's not much to look at the holdings. They would be just bonds. Okay.
All right, Spider Gold MiniShares Trust. MiniShares.
So it is the mini version of the most popular gold ETF, GLD.
Okay.
So whereas GLD, each share represents 1/10 of an ounce of gold, this one represents 1/100th of the ounce of gold. So this is cheaper if you want to do smaller trades. It is also cheaper in terms of expense ratio. In fact, one of the cheapest physically backed gold ETFs charges 18 basis points, and this is also quite popular, has gathered more than 1.4 billion in assets. Not as liquid as GLD, but GLD is much more expensive. If you are a trader, go for GLD. If you are an investor, go for GLDM. Again, to take a look and learn more about this ETF, you can go to the code page, read our articles, and from there you can go to the external home page and learn more about the ETF. Again, there's not much to learn. It is a physically backed gold ETF. It actually holds gold bars in London vaults. And as you will see, the price is around $16 because gold is around $1,600.
Yeah, it was bouncing around late last week, 1,500 and change.
Yeah.
I thought that was a little interesting. Amplify Black Swan Growth and Treasury Core ETF.
The ticker symbol is very interesting, Swan, designed for Swan, Black Swan type of events, and this is one of the black swan events, you can say.
Yeah.
So this aims to provide in participation in S&P 500's upside and protecting some of the downsides.
Okay.
So about 90% of the portfolio is invested in US Treasuries and 10% is invested in S&P 500 in the money leap options. So those leap options provide exposure to about 70% of S&P 500's upside. Those options would lose all their value if the market goes down 10% or more. But then in that case, those 90% investment in US Treasuries would gain in value because investors pile into US Treasuries when markets are volatile. It is charges 49 basis points, which I think is reasonable with the unique kind of exposure that it provides. 193 million in assets under management. You can go to the quote page, read our articles, and go to the external home page. I also did a podcast on this ETF, so you can listen to that. And if you go to Amplify's web page, you will see that it holds treasuries and the call option.
Are these three, have they been around for a while? Are they relatively new?
The Treasury Bond ETF, the first one that we discussed, has been around for a long time. GLDM was launched as a mini version of GLD, but it has been around for more than a year, and this also for more than a year.
All right, so let's see how they compare.
So on this slide, I have the 1-year price performance, and you can see that gold gained more than 22% in the past 1 year. The Amplify ETF was up around 18%. The bond ETF was about 15%, whereas with all the decline and volatility, the S&P 500 is up less than 8% over the past year now.
So it is possible to find savings.
Yeah.
Safety.
Yes, and on this slide, I have the year-to-date performance because those safe ETFs gained a lot this year. So you will see that the bond ETF and gold ETFs, though those have positive gains this year between 3 to 6%. The Amplify Black Swan ETF is barely in the green, whereas the S&P 500 is down more than 10% this year.
Okay, and do you own any of these?
I own GLDM in the ETF investor portfolio.
All right, well, thanks for the information. Always more ETF information on our website, Zacks.com. The Funds tab in the top toolbar will help guide you to that section of the site. And you heard Nina mention her ETF Spotlight podcast. She produces and hosts one of those a week generally. And so to access those podcasts that she has, just stay on the home page, scroll all the way to the bottom, click on the word podcast, and it will help take you to that section of the site. And don't forget also that you can get advance notice of positive earnings surprises with Zacks Research now predicting with about 80% accuracy which stocks are going to be beating earnings expectations before the earnings reports are even released. And to find out which stocks are coming through the screen and more about this promotion, just go to Zacks.com/promo. You'll get the full details there. With Nina, I'm Terry Ruffalo.